Hello and thank you for joining us for today's MacDesk Floor Report. Today is Thursday, August 9th. I'm Rebecca Darst from the Market Access Center here on the floor of the New York Stock Exchange. For much of the day, we've been hugging the flat line in the major indices in the absence of any compelling headlines out of Europe and the gradual conclusion of earnings season. This is a change from the volatile, data-driven and headline moves we've seen over the past couple of weeks, and certainly a far cry from the action we were seeing during the first week of August last year. As we mentioned in the midday a year ago this week, we were trading up above a reading of 40 in the VIX. Today, we're at a fraction of that reading at 1566. As for the major indices, we've lost a little ground on the session since the European close. We're down about 14 points in the Dow right now. The decline appears to have followed a fairly abrupt drop in the euro-dollar currency cross, which dropped to a reading of 122.66 shortly before noon. It's been a light news session on the whole, however, and we're coming off a four-day rally in the S&P. European debt concerns are still weakly in the background, and in the absence of any other compelling headlines, we're seeing some benign profit-taking in the market. Stocks during the Asia-Pacific session closed mostly in positive territory after China's July CPI reading came in at 1.8% year over year, while industrial production rose 9.2% year over year. The industrial production gain was the weakest such increase in about 3 years. Both of these numbers, in fact, came in softer than street estimates were expecting and gave rise to conjecture overnight that China has more room to ease interest rates. Central bankers in Japan and South Korea, meanwhile, left their benchmark rates unchanged. On the other hand, June industrial production data out of India showed its third contraction in 4 months, and India's Sensex index closed lower on that report. European stocks traded moderately higher thanks to a better than expected trade balance number from Italy and a miss out of the UK trade balance. Action in Europe was characterized for the most part by a drift lower, and this gave us little in the way of directional cues here in the US. Even a better than expected weekly jobless claims number and trade balance data here on US shores didn't enthuse traders too much one way or the other. In the options market, implied volatility in the emerging markets ETF hit a fresh 52-week low today, with the fund trading around $40.50. That's just 13 cents to the upside, but it broke the 200-day moving average for ticker EEM. The top trade of the day in EEM options is a huge September butterfly using calls and targeting a move higher of about 7.5% by September expiration. The fund's heaviest allocation, remember, is to South Korea, Brazil, China, and Taiwan, with largest sector exposures to banks, oil, and telecom. It's a higher beta ETF as far as these things go, which means that when markets move up, they tend to move a little bit higher. So we'll be watching the action in EEM closely. For additional market insights, check your inbox for the midday. For now, that's it for me, Rebecca Darst from the MacDesk Floor Report.